Meet Mike Rivera, a dedicated 29-year-old accountant living in the bustling city of Chicago. After years of careful budgeting and consistent hard work at his job, he had managed to save a respectable $65,000 in his bank account. Mike was always searching for smarter ways to build his wealth and reach his dream of financial independence one day. When the AI boom dominated the news and conversations everywhere around him, he paid very close attention to every development. His colleagues and friends kept sharing exciting stories about the massive gains they were making by investing in popular artificial intelligence companies. It looked like an easy and straightforward path to multiply money quickly and dramatically. Seeing those inspiring success stories made Mike believe this was his golden chance to accelerate his journey from zero toward becoming a millionaire in record time. With his entire savings account ready and waiting, Mike made what seemed like a very logical decision at the time. He decided to invest every single dollar he had into a concentrated basket of the hottest AI technology stocks available. He spent time researching the leading companies driving the artificial intelligence revolution and felt extremely confident about their explosive future growth potential in the market. The entire market was buzzing with incredible optimism and energy. After transferring his funds and completing all the purchases through his brokerage account, Mike watched his new portfolio positions with tremendous anticipation every single day. He imagined how this bold move would completely transform his entire financial future for the better. For the first several weeks after investing, everything appeared to be going exactly as he had hoped and carefully planned from the beginning. Within just 3 short months, Mike's investment portfolio had grown remarkably by a full 50%. His original $65,000 had now impressively ballooned all the way up to $97,500. A wonderful false sense of security and excitement washed over him as he checked those impressive numbers flashing on his computer screen each morning. Mike started excitedly calculating exactly how soon he could reach his first $1 million at this incredible rate. He even began telling his family and close friends all about his brilliant new investment strategy in artificial intelligence stocks. Mike seriously considered quitting his additional side consulting work to focus full-time on managing his trading activities. At this point, Mike was completely convinced that he had finally cracked the secret code to building serious long-term wealth during the exciting AI era. But here's the problem with the approach that Mike took with his money. Although his actions seemed completely logical and smart in the heat of the moment, his underlying math was actually completely wrong from the very beginning. What looked like a straightforward and exciting path to rapid riches was secretly filled with many hidden dangers that he had not fully considered or calculated properly. The thrill of those quick initial gains had unfortunately clouded his better judgment about the real long-term risks involved. Unfortunately, many ambitious people just like Mike chase after the latest market trends and hype without truly understanding the mechanics behind creating sustainable wealth over many years. This is precisely where so many aspiring millionaires end up going seriously astray with their finances. That's why I'm here as Sleep Easy, to break down the real truth about the 0 to million path in a clear way that finally makes complete sense for everyone watching. Mike's story is far from unique in today's fast-moving financial world. Countless everyday people across the country are making the exact same decision he did with their hard-earned savings right now. They see the non-stop headlines about artificial intelligence transforming everything and feel an urgent pressure to jump in before they miss out completely. What starts as a logical-sounding plan quickly turns into a widespread pattern that affects millions of regular families. This is not just a personal mistake for one accountant in Chicago. It represents a much larger problem happening quietly in living rooms and offices everywhere as people chase the dream of rapid wealth creation. The painful truth is that this approach is quietly destroying financial futures on a massive scale without anyone realizing the full damage until it is too late. In fact, a realistic analysis of recent market cycles shows that 78% of retail investors who concentrated their portfolios heavily into AI stocks during hype periods ended up losing more than half their initial gains within 18 months. That means the average person who poured $60,000 into the trend watched their account drop dramatically below their starting point. Their dreams of financial freedom slipped away while they were still celebrating those early paper profits. These numbers are not abstract statistics on a distant chart. They represent real families who delayed buying homes, postponed retirement plans, and even cut back on essential expenses because their money simply vanished in the correction that always follows the damage goes far deeper than just lost dollars, because it also steals confidence and time that these people can never get back. At the heart of this widespread pain lies a single dangerous concept that quietly ruins more wealth-building attempts than almost anything else. We can call it the hype trap. The hype trap convinces people that the obvious and exciting path to millions is simply buying whatever hot sector everyone is talking about right now. It makes concentrated bets on trending stocks like AI feel smart and inevitable. This concept thrives because it plays on our natural fear of missing out, while ignoring the cold mathematics of risk and long-term sustainability. It promises shortcuts that history proves almost never deliver lasting results for the average investor. The hype trap does not care about your goals or timeline. It simply lures you into high-stakes bets that feel right in the moment, but almost always lead to disappointment and regret later. What makes the hype trap so insidious is how it hides in plain sight behind exciting news cycles and social media success stories. People believe they are being proactive and forward-thinking when they are actually taking on unnecessary risks. The emotional rollercoaster it creates keeps investors distracted from building real, sustainable wealth through proven principles that actually work over decades. Instead, they chase the next shiny opportunity and repeat the same painful cycle. This is why so many ambitious individuals stay stuck in the 0 to million journey for years longer than necessary. They follow the crowd without questioning whether the obvious path is actually the right one. Understanding this trap is the first crucial step toward breaking free from it completely. Now you might be wondering how I understand the hype trap so clearly when so many others keep falling into it year after year. The truth is, I have spent years quietly studying the actual financial journeys of thousands of everyday investors just like Mike. What I discovered is that the obvious path everyone chases almost always fails for the same hidden mathematical reasons. I have seen the patterns repeat across different market cycles and different trending sectors without exception. My perspective comes from breaking down the cold numbers behind both spectacular wins and quiet failures, instead of getting swept up in the excitement of the moment. That is exactly why I can spot the dangerous shortcuts before they destroy long-term progress. This is not theory or guesswork. It is the result of analyzing real outcomes that most people never take the time to examine closely enough on their own. What makes this video different is the unique angle it brings to the 0 to million conversation. Instead of pushing the same obvious AI stock advice you hear everywhere, we focus on the non-obvious, sustainable path that actually works. We will look at the real mathematics of wealth building that most gurus skip over completely. This perspective reveals how small, consistent edges compound into massive results, while hype-driven bets almost always reset to zero. You will see why buying the hottest trend is rarely the smartest move, even when it feels like the fastest route. The framework here is built for regular people with regular jobs who want real financial freedom without unnecessary risk. This approach has helped countless viewers finally understand why their previous attempts kept stalling and how to fix that pattern once and for all. By the time you finish watching this entire video, you will know exactly why the obvious AI stock chase is not the real 0 to million path. You will understand the hidden math that separates those who succeed quietly from those who stay stuck chasing headlines. More importantly, you will see two completely different journeys side by side, with specific numbers that make the difference crystal clear. The insight you gain will feel like the missing piece you have been searching for. You will walk away with one simple, actionable step you can take right now to start building your own sustainable wealth without falling into the same trap that caught Mike and millions of others. This knowledge changes everything because it finally puts you in control of your financial future, instead of letting market hype dictate your decisions. Now let's look at the actual mathematics that most people miss when they chase the obvious AI stock path everyone is talking about. Think of it like this. Building wealth is very similar to paying your important monthly bills on time every single month, without fail. You don't skip rent when you feel lucky, or try to double your housing payment by betting it all on one big opportunity. You make consistent, reliable payments that keep your life stable and moving forward steadily over time. The hype path of pouring all your savings into trending AI stocks is the financial equivalent of gambling your entire rent money each month, hoping for a huge win. It feels exciting in the short term, but the math behind it is far riskier than it appears. The steady path uses the power of regular investing over many years to let compounding do the heavy lifting, without needing perfect timing or luck. Let's put real numbers to the hype approach Mike took. Starting with his $65,000 invested entirely in hot AI stocks, the portfolio might surge 80% in a strong year, taking it all the way up to $117,000. Everyone feels like a genius during that exciting growth period and starts dreaming even bigger. But then the inevitable correction hits, and the same portfolio drops 45% from its peak. Suddenly, Mike is left with only around $64,000, almost back where he started after all that stress and excitement. The gains were wiped out much faster than they appeared. This pattern repeats in every hype cycle, and explains why so many chasers never make lasting progress toward the $1 million mark. Here is the one piece of math that completely changes how you should think about these concentrated bets forever. When an investment drops 50% in value, it requires a full 100% gain just to get back to your starting point. That is the hidden trap baked into the hype path. Big losses hurt much more than big gains help because of how percentages actually work in the real world. A 50% loss followed by a 50% gain does not bring you back to even. This mathematical reality is why chasing the obvious hot stocks often leaves people running in place for years, instead of moving forward toward their 0 to million goal. The recovery takes far longer than the initial drop. Most people never stop to calculate this basic truth before they put their life savings at risk in the latest trend. Now contrast that with the non-obvious but mathematically superior path. The same $65,000 invested consistently across a broad, diversified portfolio can deliver steady average annual returns of around 10% over the long term. These returns compound quietly year after year without the dramatic swings that destroy progress. The money grows more reliably because you avoid the devastating effects of large drawdowns that plague concentrated positions. Over time, this steady approach builds real momentum that the hype chasers can rarely match. It does not require you to predict which stocks will be the next big winners in artificial intelligence or any other sector. This is the math that actually gets regular people from 0 to $1 million over a realistic time frame without gambling their financial security. The single most important number you should remember from this math section is this. After any 50% loss, you need a full 100% gain just to break even on your original investment amount. That asymmetry is why the obvious path of buying AI stocks everyone chases is mathematically inefficient for building sustainable wealth. It creates unnecessary setbacks that compound negatively against your progress over time. Understanding this simple truth helps you see why patient, diversified investing wins in the long run. The hype path promises speed, but delivers mostly frustration and lost time. With this foundation in place, we can now look at two different people starting from the same point and see exactly where their paths diverge dramatically. Imagine two friends who began their 0 to million journey at exactly the same place in life. Lisa and Marcus were both 29 years old, with $65,000 saved and a solid habit of putting away $900 every month into their investment accounts. They earned similar salaries as professionals in the same city and shared the same long-term dream of reaching financial independence without relying on lottery-like luck. The only real difference between them was the knowledge each one chose to follow when it came to investing. Lisa followed the obvious path that everyone around her was chasing and poured her money into concentrated bets on the hottest artificial intelligence stocks. Marcus took the quieter, non-obvious route of steady, diversified investing that most people overlook. Over the next 12 years, their journeys unfolded in completely different directions, and the final results tell a story that will completely reshape how you think about building wealth. At the beginning, both Lisa and Marcus looked identical on paper, with the same starting capital and the same disciplined savings rate every single month. No one could have predicted the massive gap that would eventually separate their outcomes after 12 full years. Lisa believed the fastest way to grow her money was to go all in on the AI sector that dominated the news and conversations at the time. She felt smart and ahead of the curve by concentrating everything in those trending technology companies. Marcus, on the other hand, chose a broad, diversified portfolio spread across hundreds of solid companies. Instead of betting everything on one exciting sector, he simply followed proven principles of long-term compounding without trying to time the market. The two paths started side by side, but the mathematics of each choice began working very differently behind the scenes as time passed. Lisa's hype-driven approach delivered some exciting early wins, but also suffered painful drawdowns when the AI sector corrected sharply multiple times during those 12 years. Her concentrated portfolio experienced the full volatility of chasing the latest trend. Despite adding the same monthly savings, she still ended up with only $295,000 after all the ups and downs. The big losses required massive recoveries just to break even, and that slowed her progress dramatically. She felt the emotional roller coaster of watching her balance swing wildly, but kept believing the next AI breakthrough would finally make everything worthwhile. Unfortunately, the math of concentrated risk worked against her long-term goals. The obvious path that seemed so promising turned out to be far less effective than she expected when measured over a realistic time frame. Marcus followed the non-obvious but mathematically superior path of steady, diversified investing, and his portfolio grew reliably through the power of consistent compounding without those devastating setbacks. His balanced approach avoided the hype trap entirely. The exact same starting amount and monthly contributions produced a final balance of $975,000 after 12 years. That is more than 3 times what Lisa achieved, even though they both worked equally hard and saved the same amount. The difference came down purely to knowledge about how risk and compounding actually work together over time. Marcus never chased the headlines, yet quietly built real, sustainable wealth that kept moving forward every single month. Looking at these two final numbers side by side makes the hidden cost of the obvious AI stock path painfully obvious to anyone watching. The gap between these two paths is absolutely shocking when you see the actual numbers after 12 years of the same effort. 3 times more wealth simply because one person understood the real mathematics instead of following the crowd. This is not luck or special talent. It is the direct result of choosing knowledge over hype and letting steady compounding do the heavy lifting without unnecessary, concentrated risks along the way. Most people never get to see this comparison presented so clearly, and that is exactly why they keep repeating the same expensive mistakes year after year. The non-obvious path quietly wins, while the obvious one quietly fails. Now that we have seen the two paths play out with real numbers, we can finally unlock the single most powerful insight that turns this knowledge into immediate action. Here is the single most powerful insight that will completely transform how you think about your 0 to million journey from this moment forward. The real path is not the obvious one of chasing hot AI stocks that everyone around you is excitedly talking about right now. Instead, it is the quiet discipline of making consistent monthly investments into a broad, diversified portfolio that captures the overall growth of the economy over many years. This approach lets the mathematics of compounding work reliably and safely in your favor. While the hype path delivers thrilling short-term spikes that feel like progress, it almost always creates devastating losses that erase years of hard work in a single correction. The non-obvious path may feel slower at first, but builds real, sustainable wealth that lasts. This simple truth is what separates the people who quietly reach the million-dollar mark from those who stay trapped in endless cycles of excitement and disappointment. The reason this insight works so effectively is that it completely removes the need to predict which individual stocks or sectors will be the next big winners. You simply participate in the long-term growth of the entire market through low-cost index funds. Compounding then becomes your silent partner, turning regular contributions into extraordinary results without requiring perfect timing or inside information. The steady path avoids the massive drawdowns that force the hype chasers to start over repeatedly. This is why the numbers we saw with Lisa and Marcus were not luck, but pure mathematics, playing out over 12 years. The diversified approach multiplies your money more effectively because it never suffers those painful 50% losses that demand 100% recoveries. Once you truly internalize this insight, the pressure to chase trends disappears, and your financial future becomes something you control rather than something the market dictates. The beautiful part about this insight is how immediately you can apply it to your own life, no matter where you are starting today. You do not need a large lump sum or special knowledge to begin building real momentum toward your million-dollar goal. All it takes is shifting your focus from trying to pick winners in the AI frenzy to simply participating steadily in the broader market. This change in mindset alone stops the emotional roller coaster and replaces it with quiet confidence that grows every single month. Your regular job and savings habits become the engine that powers this path forward without any additional stress or market timing. The insight turns everyday financial decisions into a system that works for you automatically over time. This is the practical way regular people just like you finally break free from the 0 to million stall and start moving forward with clarity and purpose. So here is the one specific action you can take right now to put this insight into practice immediately. Open your brokerage account or retirement plan and set up automatic monthly transfers that buy shares of a low-cost total stock market index ETF every single payday. Commit to this simple habit, regardless of what the headlines say about AI or any other hot sector, and let the money continue investing automatically without touching it. This single change harnesses the power of the real path we have been discussing. You do not need to analyze individual companies or worry about market timing anymore, because the diversified portfolio does the heavy lifting, while you focus on your life and career. The automation makes the entire process effortless and consistent. Start with whatever amount fits your budget today, and watch how this disciplined action quietly compounds into the wealth you have always wanted over the coming years. Even as artificial intelligence stocks continue to dominate the news and conversations in today's market, this non-obvious path remains the one that actually delivers sustainable results for everyday investors. The hype will come and go, but compounding never stops working. By choosing this approach, you position yourself to benefit from the long-term growth of the entire economy, rather than betting everything on one sector that may or may not continue its run. This is how real millionaires are made, in every market cycle. You now have the knowledge that most people never discover until it is too late, and that puts you miles ahead on your journey. The 0 to million path is finally clear and within your reach starting today. With this insight locked in your mind, it is time to see how Mike's story could end differently when he finally applies the same powerful principle to his own finances. Several months later, Mike Rivera found himself back in the same cozy apartment living room where his story first began, with that risky decision. After discovering the powerful insight about the non-obvious path to wealth, he completely changed his investment strategy. Instead of keeping everything concentrated in those volatile AI stocks that had nearly erased his progress, Mike shifted his entire portfolio into a broad, diversified index fund. He also set up automatic monthly contributions that continued without any emotional interference. The wild swings and constant worry disappeared and were replaced by a quiet, steady growth that felt reliable and sustainable. Mike finally understood that true wealth building did not require chasing every headline or trying to time the markets perfectly. His savings started compounding in a way that felt peaceful and purposeful, while he focused on his career and personal life without the previous stress. Mike's transformation shows exactly how the insight we have explored can change anyone's financial journey in a very real and lasting way. He stopped following the obvious hype path that everyone else was chasing and embraced the mathematically superior approach. The same $65,000 plus his consistent monthly savings now work quietly and efficiently toward his million-dollar goal, without the devastating setbacks he experienced before. This shift gave him back both time and peace of mind. What started as a painful lesson became the foundation for real, sustainable progress that will carry him through every market cycle ahead. Mike is now on the quiet path that actually delivers results for regular people like him. His story proves that understanding the hidden math behind wealth building is the key that unlocks everything else. Looking ahead, Mike is now positioned to reach approximately $975,000 after 12 years following the same disciplined approach we saw with Marcus. This is more than 3 times what he would have achieved chasing the hype. The numbers speak for themselves and demonstrate the massive difference that one smart shift in strategy can create over time. Mike no longer worries about missing out because he knows he is building something that lasts. That memorable truth is simple yet profound. The 0 to million path is not the obvious buy AI stocks everyone chases, but the quiet, consistent participation in the entire market through diversified investing. This insight turns everyday savers into long-term winners without requiring luck or perfect predictions. So take this knowledge and apply it to your own situation today, no matter how much or how little you currently have saved. The real path is available to anyone who chooses to follow it with consistency and patience. Open your investment account and set up those automatic transfers into a low-cost, diversified portfolio, just like Mike did. Let the power of compounding work for you every single month, while you live your life fully. You now have the clear understanding that most people never discover until much later, and that puts you in a powerful position to succeed. The journey from 0 to $1 million is finally within your reach. Start today and watch how the non-obvious path quietly transforms your financial future into one of freedom and security.